Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, October 30th, 2009. This week ends where we started, with the euro falling to the dollar on increased risk aversion and falling stocks. Following a surge in stocks yesterday on the back of better than expected US GDP news, the pair slid today almost the same amount, falling below the 1.4750 level in late New York trading. The pair met stiff resistance at the 1.4850 level, which it tested 3 times before falling around the beginning of New York trading. The dollar-yen pair, meanwhile, began dropping overnight, stalled in European trading, and then plunged in New York afternoon trading as U.S. stocks were battered. The Dow Jones fell 240 points, and the S&P was off about 2.75%. That helped the yen to strengthen, with the dollar-yen pair falling to its lowest since October 15th. The yen was also boosted by the Bank of Japan stating at the end of their interest rate meeting overnight that the central bank will stop buying corporate debt at the end of the year, effectively ending their quantitative easing program. The Japanese economy also got some good news in the form of a drop in the unemployment rate. The jobless rate declined to 5.3% in September from 5.5% in August, when forecast called for an increase. Household spending, meanwhile, was up 1% compared to last year, which is a slower pace than in the previous month and did come in below forecast. Other currencies sensitive to risk, like the Aussie, fell to the Greenback and Yen today as well. The Aussie dollar pair paired almost all of its gains from yesterday, though the 0.8950 level, which was reached early in yesterday's session, was not tested. This change of fortune was evident in New Zealand and Canadian dollar crosses as well. In news from the UK, housing prices rose 0.4% in September, a figure that was lower than forecast and shows a slowdown in the pace of gains compared to the previous 3 months. Still, the monthly change put the annual rate at a positive 2%, the first positive reading in 19 months. A second report from the UK showed consumer confidence improving. Combined, these 2 points of data show that the recovery is beginning to take hold in the UK, despite the weak third quarter GDP release we saw to end last week. Despite the positive UK news, the pound-dollar pair, like other dollar crosses, fell in favor of the greenback. However, the pound has been stronger all week against the dollar compared to the euro, and today's fall stayed above the levels we have seen in the first half of the week. There is speculation that the Bank of England will choose to scale back or pause its bond purchase program in next week's interest rate meeting, a move that would be supportive of the pound. In the U.S., data showed that personal incomes were flat in September, while personal spending declined 0.5%, following a 1.4% increase in August. The decline reflects a fall-off in auto sales as a result of the end of the Cash for Clunkers program to end the month of August. The first week of November is chock full of important fundamental releases. For starters, there will be meetings of central bank policymakers in Australia, the US, the UK, and Europe. Though the Reserve Bank of Australia is the only bank that has a chance of raising rates, the statements from the other 3 will prove to be very important in understanding how central bank officials see the strength of the recoveries within their own countries. Traders will look to gauge when the Fed will consider raising rates and their assessment of the economy following the third quarter GDP release. The focus from the Bank of England announcement will be what policymakers do about their asset purchase program, whether to pause it, let the funds allocated be used up, or to expand the program. From the ECB, traders will try to assess how policymakers see the recovery developing. In other news, the US, UK, and Eurozone will be posting their monthly manufacturing and services data, key indicators to the health of their respective economies. Friday will feature the U.S. non-farm payroll report, the most important gauge for employment in the U.S. economy. And that'll do it for our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com, and from everyone here at CMS Forex, have a great weekend and a happy Halloween.